Russia definitely does not have any US cash on hand because they paid off their US debt a good 5 years ago. Accordingly, you are required to have assets denominated in currencies other than the dollar if you are a citizen of certain nations. Almost everyone saw the recent poll that the World Gold Council conducted amongst central banks. The question was, what are your plans for the next 12 months? And the overwhelming response was an increase in gold holdings. Never guess the time while you're predicting the price. Yeah. Additionally, you informed me already, so I will not be. This is a straightforward one. I believe we will be higher. Throughout most of contemporary banking, gold has been ignored as an unnecessary extra in the world of equities and bonds. However, there are moments when it becomes a major player again, and this week might be one of those times. Multiple elements are coming together to drive the present gold bull market, which many analysts are calling a perfect storm for precious metals gain. An unprecedented 75% of the world's central bank reserves were denominated in US dollars at the turn of the century. That figure is approaching 47% now. This quick decrease is prudent, says renowned financial analyst Adrian Day. According to Adrian Day, the mining stocks will be the ones to watch if the price of gold reaches $5,000 per ounce. According to technical analysts, there may be a long stretch of outperformance ahead since the producer-to-gold ratio has emerged from a consolidation pattern that has persisted for several years. Emergences in this area of technology usually come before sector fads that last several years. In addition to purchasing gold, central banks are amassing large quantities of it. What if the current gold rally is just the beginning? Adrian Day emphasizes that this isn't a fad, but rather a prevailing theme, propelled by changes in the economy, geopolitical tensions, and Basel III's acknowledgement of gold as a principal asset. With a slew of new investors pouring money into the industry, the big players might see their output quadruple. With the current pace of accumulation, global reserves might increase by thousands of tons over the next 5 years, solidifying gold's place as a key component of the international monetary system. American investors are still mostly sitting on their hands. Around the middle of the year, GDX, a prominent gold mining ETF, had enormous withdrawals. The average investor is only now starting to take notice, and this proves it. Make sure you subscribe and push the bell icon so you never miss a moment when truth meets market before we get into Adrian Day's keen insights from his latest interview. Then let's begin. Take a look at the dollar's hegemony in central bank reserves. Around the turn of the century, for example, 75 to 78%, or nearly 80%, of all central banks' foreign reserve assets were dollars. In this context, foreign means that, as the Bank of England, I am not keeping track of pounds, but rather all other currencies. Truly, it is an impressive level of focus. Ignore all of that, including the currency, gold, and Trump. Having 80% of your reserves held in a single asset and currency is a very concentrated holding. The SSE would be swarming me if I did it on my farm, And just to reiterate, I'm aware that we brought this up before the current president took office. In fact, I think we did so in March. This pattern has persisted for quite some time. So, 5 years ago, we had approximately 65% of the world's foreign reserve assets, and now we're up to 75%. Well, that's a significant drop for normally sluggish institutions like central banks, particularly considering that they were actually making more money throughout those years. Therefore, it was quite remarkable to decrease it. Then there's the question of how low we were when Trump took office. By the end of last year, we were likely at 55%. Yeah, I recently saw a number. I believe it was about 52%, or thereabouts. Yeah. The European Central Bank provided the most recent figure I saw, which was 47%. Still, I am uncertain. That is really insane. Foreigners, even the French, are individuals I simply do not trust. It has accelerated, but I still think you should go from. However, a significant change has occurred when the percentage drops from 75 to 65 to 55, and then from 55 to 52 a few months ago, and finally to 47.5%. But I still think it's worth noting that the weaponization of the dollar has persisted for quite some time, even before the present administration came into office. However, diversification remains beneficial even after removing it, and that has just served to provide further motivation. When is it going to end? It's a weighty inquiry. In my opinion, the role of the central banks remains paramount. Then we will begin with it. Obviously, if 47% of your assets are in the dollar, and obviously some people have more and others have less, then, the urgency isn't as great as when you had 75%. However, if you're really worried about the dollar being weaponized, what's too much? If you're genuinely concerned about them taking your possessions, 0 might be the correct number. Russia definitely does not have any US cash on hand because they paid off their US debt a good 5 years ago. Therefore, you must have assets denominated in currencies other than the dollar that are much lower than 50% of your total assets for certain nations. Almost everyone saw the recent poll that the World Gold Council conducted amongst central banks. The question was, what are your plans for the next 12 months? And the overwhelming response was an increase in gold holdings. Nobody on that list mentioned intending to cut them. And I don't believe anyone else did either. I mean, what's the point? For that reason, I expect central banks to remain buyers. People are starting to see that there is extra push now due to the economy, economic transition, and geopolitical movement. Knowing something about your audience is more important than whether or not people like you and me and smart people like you are. Is it the main theme? That's what matters. Additionally, I believe that investors and the rich are now paying close attention to the change in assets, namely global reserve assets. As previously stated, it's not only the central banks, Basel III also counts, which means that gold is a key asset. Thus, many factors are re-establishing gold's place in the global monetary system. Envision a scenario where the price of gold reaches $4,500. If that price holds, gold equities will soar much higher than they are today, for the simple reason that, regardless of how much the valuation goes up, a price like that will pique the interest of even more investors in the industry. Those corporations are really flush with cash right now, especially considering the price they're asking. So, you may expect gold to fetch $45,000 to $5,000, and the seniors will be significantly more than twice as much as they are currently. I still believe that most senior stocks, not all, but most, are solid values with a lot of potential for stock price appreciation. Here, we are not discussing the companies themselves, but rather the stock market. That is my opinion for 2 reasons. The first is that, despite the fact that gold stock prices have risen substantially this year, the average American investor, the average Oklahoma dentist, or the RIA, who is completely ignorant about the subject, but is still fielding client calls and suggesting that their portfolio should contain 2% gold, is still making money. Gold is a very new concept for these folks. The flows into the GDX and the GDXJ make that point quite apparent. Up until the very end of August, I suppose. The GDX saw significant and persistent outflows until around the middle of August, specifically the 3rd week of August. I mean, consider that for a moment. Some gold stocks have increased by as much as 70%, 60%, and 50%. Gold prices have just surpassed all previous records. Everything is crumbling. Large amounts of money are leaving the GDX, though. There had been 2 weeks of inflows into the GDX, totaling over $300 million, as of last week when I departed from the workplace. I am unsure about today. Still, $3.5 billion has gone down the drain so far this year. The fact that you have lost $3.5 billion in GDX outflow so far this year is mind-boggling. I guess so. So once again, I interpret that as a sign that the average investor who isn't crazy about gold is only now starting to get into it. Now, you know that it takes more than a week or 2, or even a single swallow, to create spring or summer. However, there is no doubt that this is a major shift in focus. Thus, that is the primary. My apologies. I believe we should have some exposure to gold, an Oklahoma dentist says to his registered financial advisor, who is completely ignorant about the precious metal. Apparently, he isn't interested in HX exploration. His stock picks include Barrick, Newmont, and GDX. Sure, he invests in GDX, Barrick, or Newmont. Accordingly, I anticipate that capital will continue to pour into the stock market. Not everyone has put their money in yet, but as they do, they're buying more, and most of it is headed for the lower echelons. Even though they weren't the ones who ignited the gold boom, Adrian Day stresses that North American investors are now getting in on the action. To hedge against the possibility of the US dollar being weaponized, central banks and investors in China have been stockpiling physical gold for quite some time. The mainstream narrative is beginning to move in favor of gold as a result of sluggish jobs data, dropping rates, and a softer dollar, the conditions that have been long anticipated. As economic pressures mount, central banks, according to financial analysts, may switch from traditional interest rate changes to larger quantitative easing initiatives. An expansionary monetary policy is likely to lead to record high gold prices in the years ahead, according to historical statistics. Disputes with a limited time frame seldom cause a surge in gold prices. According to Adrian Day, the United States is losing its global hegemony due to its deficit spending and the ongoing wars in China, the Middle East, and Europe. As a result, the world is moving toward a bipolar society. You shouldn't attribute the recent uptick in gold prices to any one news story. A whole global order is being eroded, and this is a long-term reaction to that. I believe it is related to the uncertainty surrounding Trump. It's not completely irrational, in my opinion, because it primarily depends on the buyers and their motivations. In response to the dollar's potential weaponization, central banks are known to be purchasing assets that are denominated in currencies other than the dollar. And if that's your identity and your goal, you might consider purchasing a small amount of silver. Gold bullion is essentially what you're going to purchase. You have no intention of purchasing gold stocks. If you are an unofficial Chinese investor, the rules are the same. If you want to hedge against the possibility of a yuan depreciation, bullion is what you need. Gold ingots are what you need. Even if you ignore Ajax expiry, you still won't desire Newmont. When you consider the buyers and their motivations, it's not surprising that they're opting for gold bullion instead of equities. In North America, when is the usual onset of interest in gold and gold assets? In this economic environment, which is favorable to gold assets, we can expect a weakening economy, falling interest rates, rising inflation, and a weakening currency. Plus, if you go back 5 years, it's still high. Even with the dollar, which obviously had a major dip this year, but other from that, it's been looking very well up until the last couple of months. Just for a second, disregard the dollar. The story around the economy, interest rates, and inflation, however, did not bode well for gold investors. I was under the impression that the economy was poorer than what the news reports indicated. So I'm discussing the storyline now. Well, that's not my opinion, The general public has this view. However, the storyline is obviously shifting now. Even the most optimistic economic optimists can't deny that the pace of growth is decelerating in light of the employment data we've seen recently, including both new and continuing claims as well as new claims, as well as the entirety of the jobs reports from the past 2 months. Furthermore, it is highly probable that the Federal Reserve will lower interest rates. Do you mean next week? A fortnight. Probably the 16th of September. Rates will be lowered by the FED. As an example, consider inflation. Yeah, it's not exactly scurrying away, but it is getting closer. Both the Producer Pricing Index and the Consumer Price Index are showing slight increases. The storyline and the dollar's performance were both disappointing. After suffering the worst first-half loss since 1973, the mid-July recovery was the best that could be managed. The signal is not good. The narrative around all of those economic issues is shifting, in my opinion, toward an environment that is more welcoming to North Americans as investors. And that is the paradigm through which I am viewing this. Furthermore, I apologize, but you did bring up the subject of geopolitics. What we mean when we say geopolitical is crucial, in my opinion. In the past, I have conducted studies, a bit pompously, but I have, on this topic if you go back more than 50 years. Looking at geopolitical events from the past half-century reveals, of course, what mattered and what didn't. You can't possibly know when it's happening. Do the bus bombings in London and the Spanish Tube still ring a bell? Many were worried that you wouldn't receive a whole set of these. The point I'm trying to make is that historically, the effect on gold prices of major geopolitical events, which are usually wars, near wars, or acts of terrorism, is usually quite small and fleeting. In my opinion, the price of gold is not much affected by global political events such as wars and terrorist attacks. While an example of how things usually work, consider the Russian invasion of Ukraine. The gold surged forward rather dramatically, while the Russians massed troops on the border and everything. On the day the soldiers invaded, it was at its highest, and after another 6 weeks, the price of gold had returned to its level from 6 weeks prior to the invasion. Looking back, even if you consider the events of September 11th, which marked the beginning of the gold bull market in the 2000s, you can see that gold saw a surge on that day and then a slight down. Obviously, the stock market's closure played a role. Consequently, the market was shut down because investors couldn't obtain liquidity through stocks. Other factors were so considered. Naturally, nevertheless, gold prices rose thereafter. However, I contend that it had nothing to do with 9/11 or its aftermath, or even the invasion of Iraq, to name a few examples. Every one of these things has only lasted a moment. However, you're completely correct. This is Kim Kardashian for Big Boss. When discussing geopolitical issues such as wars and terrorism, that is when the phrase comes into play. But the question of who is the most powerful becomes apparent when one considers shifts in the international monetary system as a whole, the system in question when one returns to the time of Sparta and Athens. Whether it's gradual or sudden, I believe more and more people are beginning to understand that big shifts like that are inevitable. Personally, I can't help but think of that cliched Hemingway line. How do you go bankrupt slowly, at first and suddenly? This is all at once, my apologies. After that, I believe that's how things will unfold. When it comes to military might, the United States is still unrivaled. Its economic might remains unparalleled. Its political influence remains paramount. Furthermore, the US dollar remains the principal trading asset and primary reserve currency in the global market. While others have speculated about a bipolar world, I believe that the rapid erosion of these regions suggests that we are heading in the direction of a situation where China may eventually overtake the United States. This isn't original. I didn't think of it first. Even though they weren't directly involved, many of the Trump administration's associates were named in Mirren's November pre-election paper, the Mar-a-Lago report. Steve Bannon is another somebody who claims to have power within the government, but is actually not a part of it. The veracity of that is unknown to me. A bipolar world is acceptable, according to many in the administration, think tanks, and elsewhere. The gold market has been receiving structural support from central banks' ongoing purchases of the precious metal, which signifies a significant change in institutional attitudes towards these assets. As central banks shift their holdings away from fiat currencies, this pattern is likely to persist. Although these predictions should be seen as broad directional recommendations rather than specific targets, the long-term secular bull market in precious metals may push prices over the $5,000 level by 2030. Is this the start of a new era in the revaluation of gold's place in the international monetary system, or are we merely seeing another cyclical upswing? Leave a comment below with your comments. Make sure to subscribe to our channel and enable alerts to be notified of any new videos we upload if you enjoyed this one and found it helpful. Watch this video and we'll see you later. Translated by turboscribe.ai. If you want this message removed, you need to go to Unlimited.